guys, this is Justin with Ready Business Systems, and I'm just going to go through today our game plan strategy calls, specifically this monthly KPIs section here, to give you a little bit of details on what we can do for you and your business. So our build packages here obviously have a certain amount of credits you can spend per month depending on which package you purchase here. And with those credits, you can choose to use these for consulting calls, which we can do on a weekly, bi-weekly, or monthly basis. So as part of our monthly KPIs, we'll give you a copy of this Services Pricing Worksheet. So on this Services Pricing Worksheet, it's a very, very comprehensive representation of how your company is performing financially on a week-to-week basis, or every other week, or monthly, however frequently you want to perform these calls. So this is an example here. We have the tabs at the bottom of this sheet. We're going to get this set up for you. We're going to require some of your help on this. If you have QuickBooks, we get your QuickBooks login. But here we have our overhead costs. So we have all the costs you have pulling right from QuickBooks for the year, with all your expenses, your forecasted profit, and all your cost of goods sold built in there as well. This stuff in gray is not to be edited. These are calculated on other areas of the spreadsheet. So you don't actually enter your income. This is going to come off of your budget over here under our labor cost. So labor costs, you're going here, you're going to throw in your employees' names, their pay rates, and you also, everything in yellow you fill out. So you're going to put in their labor burdens, so your labor cost. And down here, it's going to spit out different things, the overtime cost, your average wage after overtime. So this here, again, this is pulling from another area of the spreadsheet for your predicted overtime. Charge rates here, it's going to pull in your labor per hour off the sheet I showed you, your overhead per hour pulled off the overhead sheet. It's going to show your costs on the job, unapplied hours, which is calculated, and you're going to throw in your desired profit margin here. It's going to give you a rate at the end of the day. So this is what we're going to track. So this is after your unbillable time, and then the rates you're going to bid on your jobs. So obviously, depending on how much unbillable time you have, you're going to have to charge more on the job if you need to reach a certain amount for the end of the day. So, and we're going to track this number week to week, month to month, and it's going to, so you know where you're on track for the end of the year. This can be further broken down by service revenue percentage. So if you have different rates, so obviously you can't get this rate for every job, but maybe you can get more for lawn care than you can for, say, lawn mowing. So we can come up with custom rates here, and it makes a weighted average to ensure that if you produce a certain amount of revenue at each rate, you're going to end up where you want at the end of the year. So what we'll be going through after we get all the setup done is each week we're going to go through and see where we landed for that week. Down here is a cumulative area for the year. There's video links in here for how to get these things done. We can fill this out for you, but really the weekly calls are to review what's already been filled out. If you want to get this stuff done for you, we can implement some of the build package credits to go in and fill in this data for you each month. So we could enter the data, and we could also review it with you. But the review typically takes about 15 to 30 minutes to go through this sheet and the numbers and talk about your performance and where you're at. I always say, it's hard to set the time aside to do this, but everything you do for your business is to make money. So if you're not paying attention to that, then you might just be spinning your wheels and not even making money. So this is the most important thing, although it's hard to see it as the most important thing at times when your trucks are breaking down, you can't hire guys, etc. But why are you doing this? To make money. That's why it's important to stay focused on this. So these pay rates here, again, everything in gray, this is pulling from the other sheet, so we're not going to edit it here. What we're going to do each week is we're going to put in the actual hours we paid each guy, right? It's going to put in the overtime hours automatically, and it's going to put in the labor cost here. You can see your total labor cost at the bottom here. Then we're going to go through, we pull from our actual bank and credit card expenses, so we can see what materials are used. These are our job supplies, right? So down here, you can select which crew these job supplies are for. So that way you can apply it down here so we can see how the crews are performing each, so we can apply the expenses appropriately. The revenue here comes from a report. We're going to pull through the revenue you actually produced last week. We have the budget. This comes from our budget spreadsheet for the overhead cost week to week. So you can see what you budgeted on producing and what you actually produced. Field hours, this will be updated month to month. That's why this is in yellow. We're going to pull it off the monthly goals because we realize too that it's a seasonal business. So we have different goals per month because we're going to do more hours in busier months and less hours in less busy months. So you can see here the hours we actually worked, which is pulling from over here. It tallies up the hours and the budget hours. Job supplies is tallying from here. And then we got charge rate end of day. This is what you actually got, and this is what your goal was, which again is pulling off of this charge rate sheet for the rate at the end of the day, your goal for the end of the day, so you can see how you performed there. So down here, this is kind of a more detailed analysis. So if you didn't do well, and in general, it's good to keep an eye on crew to crew to see where the problem is. And once you get the crew down for the week, now you know the crew is the problem. You can dig even further if you want to into specific jobs. We can dig further into specific crews, specific routes. So on here, you can see we're going to put in the hours that were worked in each crew because we know which employee is associated with each crew. It's going to show you the charge rates that you got, the revenue you got by that crew, and the hours that you paid that crew, and the job supplies spent. It's going to come up with a charge rate you actually made. So you can see here this budget, these are pulled off of those budget by services. So if your blue crew is always mowing, there's a different budget for that than it is for the FERC crew that's doing higher charge rate jobs. So you can have different goals for each crew. And here's unbillable time. So this is to keep track of how much downtime you have. So the unbillable time is going to be not only drive time, but it's also going to be time setting up in the morning, time at the end of the day. And this kind of helps explain some of these charge rates here. As you can see in this example, these are two mow crews, and you can see that the one with the higher unbillable time is a lower charge rate. So that's the way that works typically. Here, this crew also does some unbillable work in the garage, and that's why their unbillable time is so high. And they still were able to hit a good charge rate here. So this crew is performing very well. And this crew here as well, very low unbillable time. You can see they have a high charge rate to reflect that. So that's what this is. It's a breakdown. So each month, at the beginning of each year, we set these budgets. So this is where the numbers pull in for the actual hours worked for the year. So you can see budget hours per month. So in this example, the winter, we're not planning on working. Come March, you can see the hours put in here. We put notes in terms of, if you hover over here, you can see the notes for how many guys, how many weeks, how many hours. So how many hours you can assume to work per month, and that's going to change historically if you have the information, or throughout the year, you can plan that out. So it's going to come up with your budget hours, and it's going to spit out this total, 10,094 hours. And it's going to take your total overhead and divide it by the total hours, and that's how you come up with the overhead per hour. This is broken down to a weekly basis, and this is where the numbers pull from. As you can see here, this is 234 hours, which is manually entered from the month you're in. So this is with August numbers in here as the goal for the hours, or maybe it's October, I think. Budget overtime. So this is what you plan on doing for overtime, and then these numbers in the yellow here. Oh, excuse me. This is the charge rate that you're planning on hitting. So that's the $80 goal we plan on hitting. So each month, what we'll do. So week to week, we go through here. We plug in the numbers, and then at the end of the week, we tally down here. So put in the work week for the month, and that's going to average together. It's going to spit out the actual charge rate you made for that period and the actual hours you got for that period. We're going to add these in each week. And once the month is completed and we close out each month, we then throw these numbers into here and we overwrite the numbers that are in the budget. So for example, in April here, the budget hours were 1,204, the budget charge rate was 80, but the actual and the overtime budget plan was 21%. They actually had 26% overtime. It was an average of 1,535 hours during that month. A total of 1,535 hours for that month, and the charge rate was $88 instead of $80. So the budgeted revenue was 96, but they actually had 134. So you do that each month, and as you change this, it will actually tell you your profit. So as we go month to month, you'll have a planned profit at the beginning of the year, and then month to month, it's going to tell you where you're actually landing. So you can actually, it's called a rolling budget. And you'll actually be able to see where you land. And as you go through the year, the charge rate is also going to change depending, trying to force you to make that 15% profit. So it's very dynamic. We go through it week to week. We can also in here, we can build out your rate matrices, for your different services, all pulled off the charge rate for that service. One other thing I missed here is we also keep track of the gross. We have the charge rate by crew. So week to week, this is filled out. So it's in yellow. So you can see where they actually landed. You can see their average charge rates they're getting. You can see where they landed the previous week. So we can compare. So it was a lower week. Why was it lower? We also have a tally of the gross margin week to week. The gross margin is pulling from up here. You can see our gross margin on this. This is a great week. Was 30,000, and we enter that throughout here. So as you go through, based on the overhead spreadsheet, you do need to hit a gross margin for 15% profit. This is pulling from the overhead spreadsheet. So what it does is it's going to tally each week your gross margin, and it's going to tell you how much you have left to recover. So if you don't recover this, you're going to end up at a loss, obviously, or not making profit. So it's going to tell you, you put the production week number goes in here too. So you can see your 73% of the overhead you've recovered, and you're 77% through the season of your work production week. So it gives you an idea of if you're ahead or behind on your goals overall, and tells you where you're going to land. As you can see in the spreadsheet, we're playing a 15% profit, like I showed you here, and then they're actually landing at like a 10% margin. So this is something we can go through with you week to week as part of these build packages. So just to give you an idea of how those things work, we also have the option of the system build, which is building out any systems you want for your business. And then also we have the marketing build, where we build out your marketing campaigns. And we can do these however you want to set these combinations. You can do, half marketing calls, half KPIs, etc. Or you can do both, however you want to work that. And then throughout that, for example, you can have marketing build combined with blogging or marketing emails, etc. So what we would do during these marketing calls, not to go off track here, but we would give you the statistics on the different marketing emails and blogging and stuff during the weekly calls, and strategy on the marketing and things like that. So if you have any questions, feel free to reach out to us. Check out the website, readybusinesssystems.com. Thanks for watching.